Now that we've dug into the zone interaction entry, we're going to look at the sweep entry. This is going to use a lot of the same ideas as the zone interaction entry. The only difference is we are going to be trading a sweep of structural liquidity or a fractal or some form of internal range liquidity. And as a result, the overall trade idea that we're building is that once price sweeps this point of liquidity, we're going to be waiting for a confirmation candle to form to validate our setup, and it's going to allow us to take entry. So when we look at the example here, we have a sweep entry. We're looking to take a long after the sweep of this structural liquidity or this piece of liquidity is swept. And what we are waiting for is price to trade down in, sweep that point of liquidity, and then we're waiting for a confirmation candle to form. Similarly to the zone interaction type setup, when we get a confirmation candle, it's going to take the shape of a full-bodied engulfing styled candle or a candle with a large wick to the downside, showcasing that as a result of price sweeping liquidity to the left, that in this case, demand has stepped back into the market and is looking to take this market higher. Because the way we're viewing the idea here is that there is a pool of volume that exists under this low, and that if price trades below it, and then we start to see that confirmation that buying has stepped back into the market, that we could look to trade this market higher. So similarly to the zone interaction setup, we have multiple entry points and a few different stop loss points for the sweep entry. So the first entry is going to be the confirmation entry. And the confirmation entry is going to be based off of the fact that we have a confirmation candle, we have a bullish closure, and more importantly, one with a large wick to the downside, showing that as price pushed price lower, demand stepped into the market, pushing price up rapidly, showcasing that there was no more selling taking place, and we closed bullish. As a result, we're able to execute on the close of the confirmation candle and the open of the new candle with our stop loss below the confirmation candle's low. This is going to provide us with arguably the most aggressive entry because we don't have any real indication that price wants to continue lower. And one thing I will take note of or mention is that the sweep entries are going to be a more aggressive means of taking entries. And it's not something that I recommend if you're new to trading or if you have trouble with your overall directional bias. This is going to be a little bit more of an advanced style entry because at least with the zone interaction entries, you're trading with something tangible to support why you'd be looking to buy or sell in the market. Whereas with these sweep entries, you are basically trading against conventional wisdom in some cases, because if we're looking at market structure, we might be bullish like this, but if we're starting to break down, this could cause you to wonder, is this going to be a change of character and a continuation to the downside? And in some cases, you might get caught into this more often than not. So it's something that I always recommend when you're looking at sweep entries, just to tread carefully. And if you compare it with other confluences, that is ultimately going to be the best type of setup. So for example, what I mean pairing it with another confluence is if this then also tested into a zone, a demand zone on top of it being a sweep entry, now you have a double type of entry. You have a zone interaction and a sweep entry. You have additional confluence to support your entry. You have a much more robust entry or setup to take note of. But we'll just get rid of that and look at the sweep entry. But I wanted to just make sure that if you're approaching the sweep entries, that you're not just taking every single break of a high or a low, and that you are, again, trading with context. The reason why we focus so heavily on higher time frame top-down analysis and directional bias and building out our outlooks is so that we have a proper plan of attack and we understand the direction that the market is likely moving within. When we have those ideas, these sort of setups then make sense. But we need to have that understanding and that directional bias established before we look for entry models. It can't be entry models and then bias. It needs to be the opposite, or else you're going to have a lot of trouble in trading. But we have our confirmation entry. Again, we enter on the open of the candle after confirmation candle with the stop loss below the confirmation candle. Now, if you want a little bit more confirmation, or maybe the stop loss is a little bit too wide, say 20 pips or something like that, and you want something a little bit tighter, then what you can do is you can enter with a momentum entry. This would be the break of the high. And again, the momentum entry, what you'd be wanting to see is price to open, form that lower wick, and then continue up. That allows you to have this low to set your stop loss based on. If we just do this and break above the previous candle's high, it's not really going to provide you with a tangible place to put your stop loss. And in essence, you would need to use the confirmation candles low because you wouldn't really have a good point to move your stop loss or factor your stop loss into. And what I mean by that is, let's say this is the high that we're looking to break, for example. And I know I spoke about this in the previous example, but it's something that just needs to be called out a little bit more. So the candle opens, and instead of moving down, we move straight up. If this triggers you into the trade and you put your stop loss arbitrarily right here, price comes down, forms the low, and then moves to the upside, your entry should have been on the break of this high, but on this side. So you actually had a stop loss placement point. Whereas if you put it here, you don't really know where you're going to put your stop loss in this range. If you put it here, boom, you're getting stopped out, or you just put it below the confirmation candle. And this is where you're able to use that idea of, when do I use the confirmation candles low, or when can I use the momentum entry current candles low for stop loss placement? That's a good rule of thumb to factor in there. So if we do establish that lower wick, that higher low in this case, we can use the momentum entry, the current candles stop, we can use the current candles low for our stop loss. If we don't have that, or we want additional breathing room for this trade, we can use the confirmation candles low. Now, the final entry is going to be similar again to the zone interaction. We have the LPOX failure, or in this case, the last point of supply failure momentum entry. So this is going to be exactly what you expect. What is the last point of supply prior to the sweep of liquidity? In this case, it would be these buy to sell wick ranges. Again, it's a supply zone because we get that sharp pivot to the upside followed by the impulsive move to the downside, which would suggest that this is supply. So with that last point of supply failing, that's additional confirmation that this sweep has done what effectively it was trying to do, which was generate liquidity to then continue price moving to the upside. So if we're looking for an entry, we can take the break of that last point of supply, and our stop loss can be below the current momentum candles low. Now, the beauty of the LPOX style momentum entry, and something that maybe we didn't necessarily discuss in the zone interaction setup video, was the fact that if we don't have a fully defined low of the current candle, typically what we're going to have is a tangible difference or distance from the initial momentum entry to the LPOX entry. And at that point, that's going to give us a fairly tangible stop loss placement, which is going to allow this stop loss to be a little bit more meaty in terms of being able to use or base our stop loss on. But there's nothing wrong with, again, using your conservative stop loss below the confirmation candle if you want additional confirmation. Because again, what could happen is we could come up, we could wick that, take you into the trade, we could come all the way down, we could, the market's going to do all kinds of different things. None of these entries are going to be guaranteed. They're just a framework and a process that you can use to take better trades and to have that process-oriented approach. So those are the three entries for this particular sweep entry, using a confirmation candle that's more so leaning on the large wick to the downside with a bullish closure. But we do have another example with a bullish engulfing candle where, similar to the zone interaction setup, we have the LPOX failure first. So we get that sweep of liquidity. We get a very nice bullish engulfing candle. And the LPOX entry in this case, again, like I said in the zone interaction video, it's a overly aggressive style entry, and it's not something I recommend to a lot of people because you're trading under the idea that this sweep is going to reverse and it's going to play out in your favor. So again, if you're taking a trade like this, you have a lot of indication, a lot of context, and a lot of confirmation that if we take that structural liquidity, we should reverse. And there are going to be instances where it doesn't work out. You get that little wick up and then it just continues moving to the downside and you take a loss. So we already have inherent risk just taking the sweep entries. Taking this LPOX failure momentum entry can also add to the inherent level of risk. And I want to make sure that I showcase that and explain that properly so that when you approach it, you are approaching it from a top-down perspective. I'm going to keep mentioning top-down analysis, establishing your bias, and doing your outlook to drive the point home on how important it is to do all of that work to lead up to these setups. These setups are more of an afterthought that you're thinking of when you're doing your outlook, and as price action is developing, you're mindful of these things that are shaping up, and then you're able to take the trades. But it's all built off of all of that work that you've done to establish your direction and your top-down analysis. Now, if you want more confirmation, as you would expect, you have our entry number 2, the confirmation entry. We can put our stop loss underneath the confirmation candles low. entering on the next candle once our confirmation candle has actually closed. So the difference between the LPOX failure momentum entry and the confirmation entry is the confirmation entry has actually closed and actually has confirmed or has established that it is a confirmation candle. Because up until this point, until this candle actually closes, it's not actually a confirmation candle. It needs to close and then it confirms what we're expecting. It's similar to this candle. This candle is not a confirmation candle until it actually closes bullish. And hopefully that makes sense. And the final entry, as you may have guessed, and what you'll notice is everything is the same on all of this because I'm trying to create a very simplified framework and processes for you to follow. We have the momentum entry, which is the final a point of confirmation that we can use in our trades to justify these entries. We're taking the high of the confirmation candle. Again, for a momentum entry, we're going to want to see that lower wick form first and then build our entry. That's going to allow us to have our stop loss placement below the current candle's low. If not, we can also put our stop loss below the confirmation candle's low as well. And what you'll find with the sweep entries is they are incredibly powerful if you can pick the right spots of structural liquidity, specifically structural liquidity. If we see a sweep of structural liquidity with a confirmation candle, chances are we are going to see a run in the opposite direction. And this can create some very high powered trades to be involved in, especially when there is momentum in the market. It goes without saying that all of these ideas from top-down analysis and building our outlooks are all going to be based on trading sessions with volume. So that would be London session, New York, London overlap, and to a certain extent, Asia Open. There's a fair amount of volume in there, but it dies off pretty quickly. So primarily, I would recommend London and London, New York overlap. But that is the sweep entry.